Hello and welcome to the second day of SPE Offshore Europe 2023. We're on the show floor and I'm joined today by Callum Gray, Corporate Finance Partner at AAB. Callum, first of all, how are you getting on?
Very good, thank you. Delighted to see everybody back and see the show buzzing.
I know, it's 4 years, it both feels like 4 years has passed and it doesn't feel like 4 years has passed. I'm not sure how that's entirely true, but I mean, just how good is it to get back to these sorts of conferences? You really miss them when they're away.
Do you know what? I think that the 4 years has shown exactly what we've missed.
Yeah.
And it's brilliant to see such a good number of exhibitors. I think that also it's good to see how things have changed and to be able to touch and feel things on the stands and have that in-person conversation and understand what people are up to and their intent for the future is really good. The press when you read it via the internet or on paper is so much, but actually having that sort of real in-depth conversation with someone, you can't beat it.
No, you really can't. There's kind of no substitute for it. But what have been some of the kind of key themes from maybe the panel sessions or what you've been hearing from people on the floor and perhaps how have they changed since 4 years ago?
Well, I think there's a real emphasis on, what is the future energy sources looking like and how are they going to come together? And I think there's a real push on that needs to be a balanced and sustainable portfolio. That was a real key theme from yesterday's breakfast. And everybody has their part to play was another key item I took. And when I say everyone, as diverse as possible so that we can get into schools at an early stage and really pass on that message that we are here for the long term, in a sustainable way in all kinds. I think that the up and coming future, particularly at a young age, and emphasize why we do where we do it and how we do it, but also what do we then need to do to be compliant with the net zero targets is a real key thing.
I think that early engagement in STEM part, it comes up at all conferences, but it has been particularly pertinent here. And we're going to come to skills shortly, but it's especially important when we consider skills or perhaps their lack thereof in the energy industry currently. But to move on, so we've got one of the Energy Voice supplements here, of which you can come pick one up by the stand if you're at the conference. But you've penned an article for it this month. Can you kind of give us an overview, a 2-minute summation of the key themes you've been hitting at?
Sure. So there's no doubt that M&A activity in 2022, it had a bumper year. There was a lot of pent-up frustration. There was also sort of not much to talk about in terms of the COVID impact on business. And I think we saw that coming through in conversations being able to be had, opportunities and therefore things that were perhaps paused, delayed, impacted, coming to fruition, which is really great to see. 2023 has started off in terms of it's a buyer's market. There are still opportunities, but the buyer pool is not as obvious as it once was. So people have to be, more appealing. They have to stand out from the crowd. And clearly with the rising cost of debt, that's a challenge. So there's more sort of people being selective, if you will, in terms of opportunities. But one key theme that we have noticed, and it's been really interesting to watch, is around that engineering services. People who are at the sharp end of a lot of these big projects, in terms of their selling time. They've been, as you rightly say, impacted by the skills shortage, but projects need to happen. And those that have certainly got the resources, we're seeing being very active, predominantly trade, but you could see that some of these businesses have said, we now want to be on a journey. And part of that is through M&A activity, and part of that is getting into new areas. So it's been really interesting to see, and it's across the board, but it's really encouraging that if people are seeing that and looking to the future and building out their bases geographically and the service line, and I think that's encouraging for the medium term and longer term, because if those projects are happening now and there's a demand for it, hopefully with the funding will come and these projects will come on stream.
Do you think it's easier for those sorts type of companies to kind of display their own transition because they've kind of got the tactile projects, the energy transition projects they're working on, and they've also got that oil and gas. They've got a really nice kind of blend, a lot of them. They're able to demonstrate it in a kind of black and white way.
Absolutely, and I think that some are real trailblazers. I think there's a real opportunity for a lot of the rhetoric that's out there about the just transition and about the critical path, that somebody needs to live and breathe it. And I think that a lot of these companies have got a real opportunity RSK is a very good example. At its core, it's best known as an environmental consultancy business.
Yeah.
And have really taken the opportunity to set themselves a target of 5 billion revenue by 2030. Now, clearly that's going to come from multiple facets of engineering, but there's so many commonalities. There's such a knowledge base there. And when you start to bolt on the likes of PD and MS, which is more predominantly known in the oil and gas space,
Yeah.
Access Well, predominantly known for carbon capture and for reservoir engineering, you build out these niche specialisms on top of a real fundamental solid foundation. And I think that's great in terms of the future, because that it's exciting. And I think that the generations that are coming through are asking for these opportunities to say, oil and gas, I want to know and I need to know the fundamentals of that, but I also then want to apply it into, say, a different area.
Yeah.
And when these companies can offer such opportunities, I think that benefits all.
We've obviously seen wood being coveted as well, and perhaps that's been paused for the time being, but we might see something else happen there. Not that we know anything, but we might see something in the future.
Another really good example where wood as a business has made a number of key strategic decisions, some of which have resulted in divestment and a real focus on the core business now. I dare say businesses of that ilk, interest will be there because they're at the sharper end,
Yeah.
to which these medium and longer term contracts will come. But it's about a balance,
Yeah.
and it's about that just transition. So it's not just going to be a stop of one and a beginning of the other. You can apply, the engineers, in my experience, certainly love the challenge.
Yeah.
That's what they're very good at. And we are, as a nation and as a city, renowned for that engineering capability. So to be able to then take that and sell it overseas
Yeah.
and export it, again, it goes back to our roots. It's what we have done in the past from a number of industries. And I think that is a really good future for us.
Absolutely, and it seems like there's been this move of private equity in the energy transition market that's kind of gone hand in hand with private equity move in the North Sea oil and gas market. What sort of impact's that having? And I suppose private equity moves in, it makes its money, and then it moves on. So what's the kind of timeline going to be for these buyers?
So it's typically these funds will work to 10-year programs.
Yeah.
They'll look to invest in their first 5 years, and then they'll look to harvest from year 6 onwards. So that I don't see that changing. What I do think and see in the market is that a lot of these bigger projects, the money I think is going to come from predominantly other sources. And what I mean by that is the likes of the pension funds and your investment banks, and also government support. To do that together with the trade input. So the Project Acorn's a very good example. We have Macquarie in there from the investment banking side. You have Storega leading that project from the engineering capability, and then it's supported by Shell and Harbour from a trade perspective. That collaborative approach, it's covering all angles of what's needed in a project. Then the government come in and green light it into track 2, which was much needed and
very welcome.
Absolutely. So now from that, you're thinking, right, there's a really good example of something local for us. Where I see the private equity beginning to get more interested is the service and maintenance of these big projects.
Right.
So that's what they like, as it's well known, they like stability, and they like, the visibility of what's coming down the track. So no surprises. And I think that you get that with these service companies. So it's not to say they won't be in. I just think that you'll see more activity once these things begin to come on stream. So be that in the infrastructure stage, and then also the maintenance stage.
So like the next piece of the puzzle, as it were.
Exactly that, yes. But what we also are seeing is a number of these green funds. And again, they want those kind of steady assets into the likes of onshore wind in particular, anaerobic digester systems, asset heavy, where, should things go wrong, there is an asset base at which they can protect their investment. Of course, we don't hope that, but it needs to be considered. And I think there's a real persuasion is to try and find these sustainable opportunities that are going to throw off kind of that regular income. Again, I see interest in those as well.
And in the kind of IPO space with renewables companies, is there much movement there? We've seen a couple of oil and gas IPOs, and perhaps the market's not where it certainly was a few years ago. What's kind of happening in the green energy space there?
So it's a real interesting time, and it's interesting you touch on the sentiment. I think people have been watching with a lot of interest, particularly with Ithaca coming to the market, and the impact that has versus the cost versus the benefits of being able to look at the bigger capital markets, but then obviously the reporting requirements and how open you need to be with investors about your intent. What we're seeing is, I think in the short term, we're not quite there yet, because investors want those, visibility in terms of where a lot of these projects are going. So I think for this year, to the best of my knowledge, it might be too soon.
Yeah.
That said, I think, as I say, these projects are multi-million pounds, and the capital market, it being listed is giving yourself more opportunity. I think there's just some time to get there. So that is tied in very neatly with government policy in terms of that regulatory framework. I think is coming. Those that are saying maybe the more battery storage, I think there will be more there, because you're asset heavy, and you can see how that links into the upgrades of the grid. But when it comes to more kind of hydrogen projects, my pound down on the table tells me, I think that what you'll find is it's more the service businesses that are more likely to list. You've seen Wood already at the table.
Yeah.
So I think companies of that ilk who are involved in these projects actually coming to the market.
I suppose the fact that they've got many plates spinning at once gives them that kind of a broad range of services and large revenue streams, or diverse revenue streams, that is a big bonus as well. But coming back to that kind of pension fund idea and things, we've seen a lot of capital flight from oil and gas, the ESG driving the investor agenda. Has that been to the benefit of these kind of services companies and the energy transition, that kind of movement of capital, perhaps pivot of capital?
Well, it's a really interesting point, because there doesn't seem to be one common theme. Everything seems to be taken based on its own merits, if you like. I think what we are seeing is that you definitely need to be demonstrating. It's very high up on the agenda, really early in the conversation with investors now. What is your ESG policy? Who's responsible for it? What's your reporting requirements? Come and show us your brochures and documents to say that you're doing this. I also think the staff expect it as well. And we have a generation of people who are very, very interested and actually on point with this. And I think that's been an education for myself. And I'm the first to admit that, but I found it very interesting to say there's a real focus on culture.
That plays back into that skills point, doesn't
Absolutely.
it? Of trying to attract the right people.
And I think there's a real movement positively here to be, and a real opportunity for the industry to speak high, wide and handsome as to what they are doing.
Yeah.
I think if anything, and I don't want to make a slight on the industry that's given me a living, but I think that one thing we could be doing is being, a bolder with our statistics and our rhetoric around, what are we doing? Because if we really drive that, people out with the city and out with the industry, they look at it and say, fine, but they also then hear, I suppose, the negativity that can come with the industry. But as was mentioned yesterday, when it takes double to 4 times the carbon footprint to import gas versus our own supply, surely that can't be sustainable for us to meet our targets. So do people know that? Well, I suspect the minority, so we think there's an opportunity to be a bit more bolder in our approach in informing and educating people, which again hopefully attracts more, or at least that education piece, if people can understand it better.
Excellent. And so just kind of one point to finish on, I suppose. If you were writing this kind of similar M&A article in, say, 2 years' time, hopefully it's not another 4 years before we're back here at Offshore Europe.
Indeed.
But when you write this article again, perhaps in a couple of years, and looking at trends there, what do you expect to see? And what are kind of some of the emerging points, issues, challenges that are going to be there?
So I think in the shorter term, there are a number of companies who've had private equity investment for perhaps longer than expected.
Yeah.
That's not a negativity, that's just the situation. So I would expect to see into next year, now that these businesses are in a good and better place, that they'll move on. So I think there's a new swathe of investor or trade buyer into 2024. So I think the interest is there. As I say, there's a real opportunity for companies if they are thinking about new investment or taking their business to the next level. You have to be prepared with that ESG policy, with that culture, with that staff on board. So none of that is particularly new. It's just applying it to the expectations that are there currently.
Yeah.
So what you know, thinking of these things early, having a plan if it's not there already, or making sure it's fit for purpose, or sharpening it, and making sure it's on point. Again, it's for the benefit of the company anyway, regardless of a process. So that's going to continue. I think what's going to happen as well is people are going to have more opportunity to demonstrate these projects that they've been working on, because there are more of them.
Yeah.
So when everybody comes back and said, I would have liked to have gone further with you, but if you'd had more credentials in X, Y, and Z space, well, they're there now. So you can demonstrate that to a buyer and have an informed conversation. So I think 2023, of course the levels have been less because of the reasons I mentioned about 2022. I don't think we'll get back to 2022 levels, but I think it will be better than this year.
Excellent. I think that's a fantastic point to finish on, and lots of kind of good advice there, I suppose, for companies and for buyers and everyone to take away. So Callum, thank you very much for your time. That was brilliant. And for updates throughout Offshore Europe, head to energyvoice.com.